looks like the tables are definitely and absolutely turning. My mum's gone overseas and she called me on WhatsApp and she says, how's the property going? Because they feel like they missed out on buying it. So they want to know how it's going. And I thought, well, I don't really follow the local paper. I don't look into properties, but I can tell that the trend is definitely down. So I said, well, it looks like it's turning around. It's going down. And she said, oh, that's good. And I think that's how most people feel, even the ones that have already bought, unless they've actually bought it for investment purposes only, and expecting for it to keep rising and for them to, rubbing their hands and making all these profits, which people have in the last 10, 20, even 30 years. But let's see what the latest news is. This was aired 2 nights ago.
And why Sydney is now a renter's market, the new problem for investors and landlords.
All right, well, new problem for landlords and investors. But before I play this clip for you, I've got a little advice. In Australia, correct me if I'm wrong, but in Australia, I think when people go to rent, looking to rent something, they don't tend to haggle. They don't tend to ask for discount, but they absolutely should. So when you buying a home, you kind of try and ask for 5-10% off the listed price. You put in your offer, it's a big bucks, all right. But if you really like it, you'll probably just pay the asking price minus, I don't know, $5,000-$10,000 and feel good about it. But when people rent, they just assume that if something says $420 a week, they will just pay $420 a week, or they'll just walk away and say, oh, but that's too much for us. Instead, what people should do is actually say, look, I'm happy to rent it. I've got a good, clean record. I've got a full-time job. I'm sure you'll like my application, but I'm not going to pay $420. I'm going to give you $390, and see how it goes. If it falls through, it falls through. And perfect example is one of the units in this building is that where they were asking $420 exactly dollars, and the people had a look at it. And how do I know they liked it? Well, hear me out. They liked it, but they didn't really thought that was worth it. It was out of their budget, so they walked away. And then the landlord, a week or two later, dropped the price to $395 a week. And these same people got back to the real estate agent and said, oh well, we are interested now. We're going to put in the application. And they got it. So they did get it in the end because the landlord had to reduce the price. But what I would say they should have done is exactly what I mentioned earlier. They should have said, look, we'll give you $390, and if the landlord comes back and says, hey, $400 and I'll take it, that would have been a good outcome as well. This worked out for them because they hadn't found anything in the interim, but really people should put in an offer even when it's being rented. And so be it. If you miss out, there's plenty of fish in the sea. And as we are going to find out, there are plenty units and houses up for rent available. So vacancy rates are very high at the moment, they tell us.
Australia's largest city has become a renter's market. And with Sydney leading national property prices down, it's also buyers holding the whip hand. In a worrying trend for investors and landlords, rental vacancy rates have hit their highest on record. As investors retreat from the market, there are predictions of yet more downward pressure on house prices. Leading property analyst and managing director of SQM Research, Louis Christopher, joined me earlier. Louis Christopher, thank you for joining the business.
Nice to be here, Carrington.
Is it fair to say that the market has turned and it has now become a market for those renting?
For the Sydney housing market, yes, it's very fair to say the market has turned. 12 months ago, the market was a landlord's market with vacancy rates under 2%, and it was a seller's market with prices still rising fairly quickly. All that has changed. We now have a situation where simultaneously it is a renter's market and it is a buyer's market, and it is very likely to be
I kind of slightly disagree with that. It's not a buyer's market. Buyer's market would be when you're expecting the price to from here on to go up. And as he's going to say, even himself, this gentleman, is that the prices are expected to go down. So how's that a buyer's market? So what I'm saying is that it's not a buyer's market, it's just not a seller's market. So you shouldn't be buying it. If you are looking to sell, there shouldn't be any buyers, because you should sit on the sidelines and wait for it to pull back even more. But he's just going to actually, I think, state that later on. But it's not a buyer's market. Absolutely not. Don't buy yet. It's very early in this downturn, and we're talking next 5 years. And I'm pretty sure he's going to mention it.
Recently, a buyer's market and a renter's market as we get into later 2018.
So does this mean that we now have an oversupply of properties across Australia, do you think?
I think it's still, when we speak nationally, it is a mixed market. While Sydney is in a downturn, it is fair to say, for example, in Hobart, we are seeing still rapid increases in dwelling prices, and landlords definitely have the power in that particular city. So we need to consider each city as it is, but when we consider the east coast of Australia, it's quite clear that Sydney, and to a lesser extent Melbourne, are in a downturn.
All right, he asked him if there's an oversupply, and he's talking about the actual price. He just said, is there an oversupply? And we know there is. So, is there an oversupply? Yes or no? And then he's only talking about prices as if that is the only factor that influences the price. This is kind of annoying. He really didn't answer the question, nowhere near.
Brisbane appears to be holding, and we suspect that it will actually get better for landlords over the next 12 months in Brisbane, because we believe that there is a movement of people from Sydney moving back into the Brisbane market.
All right, so movement of people, the prices are going down in Sydney, Melbourne, they kind of going up in Hobart, but he didn't answer the question if there's an oversupply, and we know there is. After years and years of telling us how there is an undersupply, and I proven that in my past videos, where tell me where you want to rent or buy, and I'll go online and I'll find you property. Whichever you want, 1 bedroom unit to 4 or 5 bedroom mansion house, or somewhere in the middle of 2 bedroom unit or 3 bedroom house. I will find it, any area for you to buy or to rent. So there's no shortage. Oh, but it's too expensive. That is not shortage. That is shortage of affordable properties, not a shortage of supply. There's a difference, in my opinion.
What is the historical connection between the rental market and what happens to house prices? Is this likely to mean that we're going to see even further downward pressure on prices, which we know have already started to head south?
Well, in Sydney, historically, that connection between the rental market and the for sale market has been disconnected. Whenever we've had a strong seller's market in Sydney, we've generally had a weaker rental market, or whenever we've had a strong rental market, it's generally been a weaker for sale market. So this is the first time I've seen in my career where both the rental market and the for sale market is weak.
Louis, is it likely that this is going to get worse before it gets better? We know that there's still a lot of apartment complexes to be finished and sold. Do you think prices must get worse before they improve?
It is likely at this stage that dwelling prices are going to fall before they bottom out. We're not too sure when they will bottom out, but when we look at the stock for sale in the marketplace, that is still rising. And as we enter into springtime, it's a time...
Stock for sale in the marketplace is rising. I think he's just finally answered that question. So the stock, the properties on the market for sale have gone up. There's more properties, means that there's more supply, possibly oversupply, but he just won't spell it out.
And when seasonally you see even more listings into the marketplace, we're likely to see further price falls just simply based on the weight of listings in the market.
For those people, for those investors who have these properties and are looking at a marketplace where vacancy rates are going up and rents are coming down, do you think there is a risk that they will be trying to sell into that market in order to get into it before it gets worse?
While I don't believe we're going to see a lot of forced sale activity, and let's consider the fact that default rates are still very, very low levels across the country, it is true that there will be investors who will look at the numbers and realise that this investment is not working out. Let's just sell. Indeed, we are seeing that now, in our view. So it is likely we'll see more and more investors look at the market, look at their own numbers, and just say they want to get out. I don't think it's going to be an absolute panic. I do not believe we're going to see an absolute crash in the marketplace, but it is likely we're going to see quite a number of years of the market being in the doldrums.
Quite a number of years of the market being in the doldrums. And it's a buyer's market? No, you don't buy into a declining market of anything. Quite a number of years. So it's not a seller's market, and it's definitely not a buyer's market. So good luck to those who are holding the bag.
And what is your expectation of how much prices should fall before this bottoms out?
Very difficult to forecast a specific number going out. At this stage, the current tempo for Sydney is about a 5% decrease in prices per annum. That could pick up on a per annum basis. The market is clearly still overvalued in.
Okay, so, I mean, this is interesting. So he said quite a number of years it's going to be going down. And it's going to be going down about 5% per year, and that will increase per year. So maybe this year we might see 5% decrease, and then next year 7% decrease, and the year after that 8% decrease, and the fourth year 10% decrease. You know what? I think I've calculated about 35% there. Compound decrease of property prices. But listen to what he says next. Not that he's some sort of prophet that we base our decisions off of, but it's very interesting that the talking heads on the mainstream media, non-commercial, ABC TV, granted, are saying this.
On our numbers in June, we had that could pick up on a per annum basis. The market is clearly still overvalued in Sydney. On our numbers in June, we had the market being overvalued by some 43%.
Market overvalued at 43%. I mean, you knew I was going to pause here and make a comment. Market overvalued by 43%.
The market is clearly still overvalued in Sydney. On our numbers in June, we had the market being overvalued by some 43%. Now, that's not to say we're going to see a 43% correction in prices, but it may well mean that the market is going to be in the doldrums for quite some time.
Well, this is exactly what he said before. For quite a number of years, the market's going to be in the doldrums and lose about 5% and increasing over the quite a number of years, as he said. And then he mentions that there's 43% overvaluation of the property. So, you know what? We've been talking about this 40% thing. I think that might be at least going to happen eventually after quite a number of years, as he said.
When we look at Melbourne, we also have a significant overvalued market there as well. But what's been propping up that market has been very, very strong population growth. If we were to see a slowdown in that population growth rate, then I think Melbourne would also enter into a more heavier downturn than what is currently existing in that market.
Lou Christopher, thank you for joining the business.
Good to be here.
Lou Christopher, well, thank you very much, and thank you very much for watching. Subscribe, and I'll get more videos coming your way with similar content, however, I hope. And I definitely promise that it will be fresh. Thanks again, and I'll talk to you in the next one.